You ever wonder what actually happens the second after you click buy or sell on a trade? I mean, it feels instant, right? But behind that one little click, there's this whole complex system at work. And believe me, it can seriously impact your trading. So today, we're going to pull back that curtain and look at your broker's hedging policy. So yeah, let's just get right into it. You've done all your homework. You see the perfect setup and you hit that button. You just clicked buy. So what now? What happens in that split second? Where does your order actually go? The answer? It's probably not what you think. Everything kicks off with this one simple action. But what you're seeing on your platform, that's really just the tip of the iceberg. Your trade is just starting its journey, and trust me, understanding that journey is absolutely key. All right, let's do it. Let's follow your trade and see where it goes. This little trip is going to reveal the fundamental and, frankly, often misunderstood relationship that you have with your broker. Okay, this right here is the single most important thing to get. Your broker is your counterparty. They aren't just some neutral middleman connecting you to the market. No way. When you buy, they are the ones selling to you. And when you sell, they're the ones buying from you. They are, by definition, always on the other side of your trade. Now, you can probably see how this whole arrangement creates a pretty big problem for the broker. It's a problem they have to figure out how to solve with every single trade their clients make all day, every day. I mean, just think about it for a second. If they're always taking the opposite side of your trade, what happens when you win? Well, they stand to lose. Every single position you open is a potential loss on their books if the market moves against them. That's called market risk, and for them, it's a constant threat to their entire business. So, how do they deal with it? How do they not go broke? The answer is something called hedging. You can think of it as their game plan, their strategy for managing all that risk. It's literally how they stay in business while taking the other side of thousands, maybe millions, of trades a day. So let's open up that playbook and see what's inside. Brokers really have a few key strategies, and which one they decide to use for your trade has some pretty major implications for you. So one of the most common tricks in the book is called internalization. It's pretty clever, actually. Let's say you want to buy one lot of Euro US dollar, and at the exact same time, another client at the very same brokerage wants to sell one lot of Euro US dollar. Well, the broker can just match you two up internally, and poof, their risk on those trades is completely gone. It's all handled in-house, and they never even had to touch the outside market. Now, this is where it gets really interesting. We've got two basic models, A-book and B-book. With A-book, your broker acts like a bridge. They pass your trade straight on to a big liquidity provider, like a major bank, and they make their money from a tiny markup on the spread. But with a B-book model, they keep your trade on their own books. They're taking on the full risk, which means they are in effect betting against you. And in that model, they make money when you lose money. And this table kind of lays out the whole spectrum for us. You've got the straightforward A-book and B-book. But a lot of brokers actually use a hybrid approach, which is sometimes called a C-book. With this, they might hedge just a piece of your trade. Or, get this, if they think a ton of their clients are wrong about a currency pair, they might even hedge more than 100% of the position to try and profit themselves when the market turns. It all comes down to their real-time risk calculations. Okay, so that's all fascinating stuff about how the broker operates. But why should you care? Well, because their internal policies can have a direct and sometimes painful impact on your trading. Yeah, a broker's hedging model isn't just some back office detail. It can be the reason you suddenly face trading restrictions, like being told you can't open any more positions. It's why your margin requirements might suddenly spike out of nowhere. And it can absolutely be the source of bad slippage and terrible execution, especially if there's a conflict of interest at play. At the end of the day, it dictates your entire trading flexibility. But here's the ultimate risk, the big one, counterparty risk. If your broker totally messes up their hedging and gets caught on the wrong side of a huge market move, they could get wiped out. They could go bankrupt. And if your broker goes bust, your money could go down with them. It's as simple as that. Their financial health is your business. So yeah, you really can't afford to be in the dark on this stuff. Let's talk about what you can actually do to become a more informed trader and protect yourself. The good news is this information isn't usually some big secret. You just have to be willing to do a little bit of digging. The very first place to look is in your broker's official terms and conditions, their policy documents. It's almost always there, in the fine print. And you know what? Don't ever be afraid to ask them directly. Get in touch with your broker and just ask for a copy of their hedging policy. Ask them who their liquidity providers are. Any broker that's on the level should be totally transparent about this stuff. On the flip side, you have to be on the lookout for these huge red flags. If a broker is being super secretive about how they operate, if they flat out refuse to tell you who their liquidity providers are, or if their legal documents are just confusing and vague on purpose, you should be really, really suspicious. At the end of the day, transparency is everything.
So there you have it. We've uncovered the secret journey your trade takes every single time you hit that button. We've seen the huge risks your broker is up against and the playbook they use to manage it. Now you're in on the secret. So the only real question left is, do you really know who you're trading with?